All right, hello everybody. Um, I've had people DMing me, and I wanted to do like a quick. Well, it's not going to be quick, but probably like a good 30-minute video on what I consider to be like the key elements to trading. What you need to know, and if you know, trading starts to become very easy. Um, and I'm not trying to minimize that. It's a lot of work to get to the point where trading is easy. But once you put in the work and do the studying, things start to fall into place and get easy. Um, the first thing I want to discuss is going to be volume, well, VPOCs and POCs. Um, I always chart those on the 30-day, 30-minute. Um, and VPOCs and POCs come with volume profile indicators. Um, I use a paid one, but I'm sure you can find a public one that will have volume profile with POCs. What a POC is a point of control. Point of control is the area on the chart where the most trading took place on any given day. And by trading, that's going to be buying and selling. And that gives you your point of control. Points of control are extremely powerful once you understand them. Um, they become supply and demand zones, and they also act as magnets, which will pull the stock to them. Um, and when you're thinking about points of control, you want to think about the psychology of the points of control. And the way that psychology would work is so let's say you're a retail investor and you bought Roblox here at this point of control on December 14th. And right after you bought shares, it tanked. And so now you're like, oh crap, I'm negative, however much in this trade. And the next time it comes back to that point of control, which is right here, most retail investors are going to sell at break even and take their money and run and move on to live to trade another day. And since this barely tapped the POC here, it will probably still have relative strength the next time the stock price comes back there. And you can see that on this day here. We come up, we cross the POC, but then we immediately pull back down. And so when you're looking at this, think of yourself. If you were to buy stocks here and you get back here, most people are going to pull the trigger and get out of the trade there. If they didn't cut it at a loss earlier, they're just going to cut it trying to get break even at best. The other end of the spectrum, with POCs, we have, like the market makers where the stock price gets to a point where they're interested in buying, like here on December 14th. And they put in a massive order for millions of dollars of shares. And when they put in that massive order for millions of dollars of shares, the price rockets up. And they put in a limit order here. Market makers don't chase price. So when they put in their limit order here for millions of shares or millions of dollars of shares, the next time the price comes down to there, they're going to get more filled and the price is going to take off again. And you can see this happen, quite a bit. Like they got to fill here, they got to fill here, got to fill here, got to fill here, and then got to fill over here. Who knows if their order is still standing the next time it touches this POC here. But so that should already be making a lot of sense. So if you look at this, we're expecting these to act as magnets, but then also as support and resistance. So if we go to the 1 year, 1 day chart on Roblox here, I noticed last night we have a bear flag on Roblox. And so at that point, I drew out my bear flag, and then I zoomed in. I like to trade on the 3-minute time frame. Sometimes the 5-minute, but generally I'm always on the 3-minute time frame. And from this bear flag, my safe entry is going to be the last place that the stock touched that bear flag, which is right here. So I put a line on my chart that says short here at 97.94. So today when the market opened, pulled down, took puts here. When I started seeing buying pressure on this wick here, I got out. Roblox retested, took puts again, played them down. I don't know exactly where on the chart I got out, but I got out somewhere. And this was a good move. Made a good amount of money on this. And then also, if you're paying attention, and this is what you should be doing as you're trading, we have another, wrong drawing tool. We have another bear flag forming here, right? So here's our pull, and there's our flag. So you know, as soon as that breaks, we can take puts again. The safe entry is going to be the last touch here. The riskier entry would be when you cross below the line showing the bear flag. But anyway, if you took this, the safe entry, again, you made money. If you were to look at my Twitter last night, let me just pull this up really quick. Sorry, should have had this ready. I said Roblox one day, looks like we see more downside, expect to bounce around 94.50. So from my POC here, which was a virgin point of control until today when it got touched, December 14th, this was untouched, untested. I guess we have to go to a wider time frame. But so this point of control formed December 14th. And once the stock price left it, it never came back to it, which makes it a virgin point of control. And a virgin point of control is much stronger than a point of control. Once this virgin point of control was touched today, it's no longer a virgin point of control. So you can see on my chart, I have like VPOC here, VPOC here. This actually isn't a VPOC anymore. I have to change this. But once they get touched, after the stock price leaves it, like here today, this goes from being virgin from here to being just a point of control. The virgin point of controls are going to be much stronger. But so for me, I was able to say we're going to see a bounce around 94.50 because I have a virgin point of control here. So from my bear flag, I should see downside, and that downside should be pulled. And actually, I should just erase this. This is going to be confusing. This is today's trading day. So this POC formed during this trading day. But so yesterday, as I was charting, this is the only POC, or at that point in time, the only virgin point of control that was on the chart. So I knew if we break this bear flag, we should come all the way down to 94.50-ish, give or take. So right there, you should start to see the power of these VPOCs and POCs. You can literally predict where the price is going to go. Market pending. The market can always have some crazy news or something that will completely change the course of a stock. But if everything's normal, and you have a bear flag and it plays out, you should be able to play puts, and you should be able to predict that you're going to see downside to here. If this was the opposite, I have a gap. This big green box is a gap. And if I was playing calls, I would actually expect to fill this gap and come up to this this virgin point of control at 107. Actually, sorry, this is a point of control now. I need to change that. Should come up to this point of control at 107, or at least fill the gap here and come to this virgin point of control, which I don't have drawn in. Right there, 105. And POCs and virgin point of controls, they're good for about 30 days. So you can go back to, whatever, December 1st or whatever, and those point of controls will still be respected. Oh, Zazas, no problem. If you need more help, you can always DM me. Look me up on Twitter and send me a message. And so, like I was saying, with these point of controls, they're good for about 30 days. And you can really predict where the price is going to go just with these points of control. So on my Twitter, like I said yesterday, I said we're going to break this bear flag. I'm going to short the stock here. And we should see a bounce around 94.50. It ended up bouncing at 94.28. I played calls up. And then I was telling people in Discord, after those calls up, this is a 1 point move, which is, or $1.25 move, which is great for puts. I said after we see that move to the upside, we're going to consolidate. And once we're done consolidating, we should break to the upside again. And that's exactly what happened. And so you want to recognize consolidation. So in stocks, we only have 3 different types of price action. We have uptrends, downtrends, and consolidation. You should be able to recognize uptrends and downtrends, but let's just switch over to SPY really quick and look at an uptrend or downtrend or whatever. Oh, here we go. This is a great one. So, an uptrend, you're looking for higher highs, higher low, higher high, higher low, higher high. Here, higher low. And you just keep going. And then a downtrend is going to be the inverse. And then, of course, consolidation is going to be this sideways movement. Let's go back to Roblox. So you want to learn to recognize consolidation because you don't want to take trades in this area, this consolidation area. If you're trading options, you're going to get eaten up alive by theta here. So learn to recognize consolidation. You can play breakouts above or below of consolidation, but don't trade in consolidation. And then there's another great thing you can look at. If we remove that consolidation, if you're looking at the volume profile, it forms price shelves. And those price shelves you can think of as stairs. Anywhere where there's a stair, the stock has support and it can stand on it. But if there's no stair, it'll move from one to the other very quickly. So you can see here where we broke out of this consolidation area, we also have a gap in this volume profile. And where you have a gap in the volume profile, on a 3-minute candlestick, we can go from one stair to the next stair. But then we have another volume shelf here on the volume profile. And so we start consolidating again. And then when we break above, I'm just going to draw a line here because we're getting a little bit far away from the volume profile. But once we get above this shelf, we can go up to the next stair, right? And then we'll start consolidating there. So you want to pay attention to your volume shelves on your volume profile, and you don't want to take a trade somewhere where you have a large shelf like this. I'll get to that at the end of this, okay? So we're looking for where there's gaps and to take trades there when you break out of shelves. And this might be a little bit confusing, but when Roblox opened today, these shelves didn't exist. These shelves formed throughout the day. So Roblox was able to fall from here to here with almost no resistance. It started forming a little bit of a shelf here. It formed a second bear flag. But this shelf here didn't form until this part of the day. Okay, and this shelf didn't form until we started consolidating down here. And then this shelf mostly formed during the consolidation here. So where you see open spaces in the volume profile, the stock can move very quickly because there's nothing there to support it. So again, think of these shelves as steps. If you jump up in the air and you don't have a step to fall on, you're just going to free fall down. Whereas if you jump up and there's a step there, you can land on it and you'll consolidate sideways there. This blue area on the volume profile is called the value area. And the value area is going to be where 68%, or some people do 70%. I do 68%. So for me, where 68% of the trading volume happened on any given day. So this is 68% of all the trading, so buying and selling, took place in this blue area on the chart. The other thing you have to really look at when you're trading is your volume. So in Thinkorswim, I use the volume average. So if you type in volume average, it'll come up. And click apply. And the volume average gives you your volume with a 50-day volume moving average. And as long as your volume is above this volume average, you have enough volume to take trades. The other thing that you want to look at is you want to look for volume anomalies. The one I'm about to show you is not perfect, but it's good enough for just example sake. So if we look at the stock price here, we're trending up, right? But if we look at the volume here, we're trending down. So that's a volume anomaly. Actually, that's not even a good example, because this is trending up here. Anyway, you get the idea. If stock price is going up and volume is going down, you want to look to get out of the trade because it's probably going to reverse on you. I say probably because, there's nothing is 100% in trading or stocks. But if you learn volume profile, POCs or VPOCs, and volume, you can be a very successful trader. And then if you start to incorporate technical analysis, things get even easier. I want to touch on volume profile a tiny bit more. Let me find some good examples to show you guys. Okay, here. So this looks like a P, where your volume profile looks like a P. you're generally going to see strength and upside. And where your volume profile looks like a lowercase b, like this, you're going to see weakness in selling. I was talking with several people on Discord today, and I was saying if you're a newer trader, and you're learning, what I would really recommend is stick to one. Stick to one symbol and trade it. And so, as an example, I use this strategy, trading inside bars on SPY. I actually took a trade on SPY today using inside bars, and it's right here. Let me just draw this out really quick so it's clear for people. So this candlestick here, the high is roughly there, the low is roughly there. I'm not going for accuracy here, but so you can see the next candlestick is inside of the high and the low of the previous candlestick. So this yellow candlestick here is considered an inside bar. The next candlestick is an outside bar, meaning the high and the low is below the low and above the high of this previous candlestick. This might be getting a little bit confusing, I'm sorry. But so you don't want to trade an outside bar right after an inside bar. So let me get rid of some of these lines so it's not so confusing. But so inside bar forms, the candlesticks close, and then this wick, let me zoom in so it's a little bit easier to see. This candle, I was watching this live. This wick formed really fast. And so I didn't take puts here because that's how you would normally trade an inside bar, is when it breaks the low of the inside bar, you would take puts. But it went so fast, I'm like, oh no, I'm not taking that. And then it started to see upside. And again, really quick wick. And I'm like, okay, now I have an outside bar. I'm not trying to trade this until the next candle at a minimum. And so normally I would take calls at the high, the break of the high of the inside bar, or puts at the low of the break of the inside bar, except if it happens to be an outside bar after the inside bar, which it is in this case. And then my trigger becomes the high of the outside bar or the low of the outside bar. A lot of this I'm going over very quickly. So if you have questions, again, you can message me. You can ask questions on the video in YouTube, or you can message me on Twitter. It doesn't matter, Discord. Or you can just Google videos specifically on like inside bars and outside bars, or on VPOCs and POCs. Trading Lit does a really good video on inside bars. on VPOCs and POCs. But I'm just trying to give all of the information in a shorter video where you can go and research all the information that you need to become like a successful trader. So in this instance, I end up taking the high, the break of the high of this outside bar on SPY, and I played it up. I got out on this very same candle, but it was still a good move. I made like, I bought the contracts, I want to say, for like $30, and I sold them for like 42. And I bought multiple contracts. So it's quick, easy money. But if we look at one that's less complicated, let's just look at strictly an inside bar. So And you'll see these all day long. Some of them you might get faked out a little bit, but most of them you'll be able to make money on. Like this one here is a fake out, but every other inside bar up until this point you can make money on. So again, on inside bars, we're going to take either the high or the low of the inside bar as our trigger. In this case, when we break the low, we would take puts. And again, you're going to make money here. And you can do this all day long on the 3-minute chart or the 5-minute chart or the 15-minute chart on SPY. And so here on this inside bar, you would take the close of the high as your trigger for calls. On this inside bar, you're going to take the close of the low as your trigger for puts. This one you would have got faked out on. And then, yeah, take the trigger here, the low for puts. And you can do this all day long. So that's what I was saying in Discord today for newer traders. Just focus on trading inside bars on SPY. And as you're trading inside bars on SPY, start looking for patterns. Look for uptrends. Look for downtrends. Look for flags. Let me see. Here. Yeah, here we have a little... Actually, sorry. Here. We have a little bear flag. Right? Here's our pull. If you play the break of this, you made good money. So as you're trading SPY, and again, this is for new traders that are trying to learn. Seriously, just trade inside bars on SPY. And as you're doing it, pick a pattern. Like if you're not familiar with technical analysis, say, okay, today I'm going to focus on just trying to find bear flags and bull flags. Like we have one here as well. Here's a bull flag. And so you just start looking for these all day long, and you can start trading them as you get comfortable. And you can see these, you're going to make way more money playing the break of the bull flags and bear flags than you will of the inside bars and outside bars. But this is a good way, trading the inside bars, outside bars is a good way to get experience trading and feeling confident taking trades. And as you're doing it, look for whatever pattern it is you decide you want to look for on that given day, and start trading those as well. Once you feel comfortable, like, oh, I can spot a bear flag, I can spot a bull flag. And once I do, I know there's a pretty good chance there's going to be a good move afterwards. Trying to think if there's anything else I really wanted to go over. Zazis, I'll get to your questions in just a second, okay? Yeah, I believe that's going to do it for the video. Zazis on time frames. Okay, actually, that's a super good question. When I look at a chart, I look at, like I have a handful of charts, like probably 30 charts I look at every single night. And every single night I'll draw out my my POCs, my VPOCs. And, if a VPOC has been touched, I'll change it from a VPOC to a POC. If I feel like it's been touched enough times that it's not really valid anymore, it's not being respected by the stock, then I'll just take it off my chart. And I always do that on the 30-day, 30-minute. And this might sound stupid, and I apologize. I don't remember the importance of the 30-day, 30-minute. But that's what my mentor taught me. I'm pretty sure that's where market makers look for POCs and VPOCs, which is why we trade them on the 30-day, 30-minute. And actually, I don't know why this one is off. What's going on? I am on the 30-day, 30-minute. Yeah. But so you'll see if I go out to like the 1 hour or the 1 day or whatever, the VPOCs will look like they're slightly off. And so it is actually important to do it on the 30-minute time frame, because those, the POCs move based on the time frame that you're looking at. So when I'm charting, I'll pull up my chart, and I generally will start at the 3-year, 1 week. And I'll look at the chart and I'll see, like, is there anything of importance? Is there a double top, a double bottom, head and shoulders pattern, bull flag, bear flag, whatever. Pick your poison. And then I'll go to the 1 year, 1 day. And this is where I saw that bear flag. And so I charted that out, or plotted that out on my chart. And then I started to figure out my entry and how I was going to play it if it broke to the downside. And then from there, I go to the 30-day, 4-hour, and I'll look and I'll see if there's anything of importance here. And then I'll go to the 30-day, 2-hour, 30-day, 1 hour. Or sorry, I clicked the wrong one there. And every time I'm looking to see if there's anything of importance on that chart. You know, sometimes like we have a bear flag here on the 1 day chart, and sometimes you'll see a bull flag inside of a bear flag, or vice versa, or whatever, on a lower time frame. And then finally, I go to the 30-day, 30-minute, and I'll draw out my points of control. And then I'll move on to the next chart. I don't really go down to the lower time frames until the actual trading day. So like if we look at Tesla, for example, on Tesla, you know, I'll go down during intraday trading. I'm pretty much always on the 3-minute, but I'll start looking for flags during the day, or whatever else, you know, other technical analysis. And when I see one, you know, I'll draw it on and I'll just wait for it to break. Trading is all about patience. So you look for your perfect setups. Once you find them, you make sure you have enough volume and you take the trade. So when I'm charting after hours, again, I start on the week, I go to the day, the 4-hour, 2-hour, 1 hour, 30-day, 30-minute, and there I plot all of my VPOCs and POCs. And for intraday trading, I'm pretty much always just looking at the 3-minute. On SPY, I will switch to the 5-minute and 15-minute and look for, I'll look for inside bars and try to trade those. And you also want to make sure you're always checking ES, which is basically like futures for SPY. Wow, look at this green. Crazy. Wow. And NQ, which is like the QQQs. So I always plot my VPOCs and POCs on both of those. Yeah, that's pretty much it. Hopefully that answers your questions, Jesus. But like I said, if you have questions, just hit me up. Hit me up on Twitter or whatever. We can hop on Discord and I can give you some more directed help or advice. Also, I would highly recommend reading the book Volume Price Analysis by Anna Cooling. Really, really good book. With that alone, you can learn how to just trade based on volume. So yeah, that's going to be it for me. I'm going to hop off. Like I said, just DM me if you have questions. All right. Take care. Have a good day. Bye.